Guys, today we're looking at a chart comparing the current returns for Bitcoin since its all-time high to the previous two cycles, and we're coming to a conclusion today that Bitcoin is actually a little bit too high. It's a little bit higher than it needs to be. It's a little bit higher than it should be, and for that reason, we probably need to come down a little. We probably need to correct a little to come back down to the baseline expectation for this point in the cycle. So that's pretty big, right? Because people are getting caught up by hype right now. They're getting caught up by greed. There's a lot more bulls than there are bears, and I can attest to that with my YouTube community polls. And this data, this actual cyclical data, does suggest that people are actually a little bit too bullish right now, and that Bitcoin probably needs to come down a little bit. Now, whether it goes to 48K first or comes down from here, that's the big question. Obviously, the ETF news and rumors kind of muddled that up a little bit. So we'll get into this today. Lots to discuss on this topic. Ladies and gentlemen, leave a like, comment, subscribe. Let's get into it. Guys, let's jump straight into it. Bitcoin is moving a little bit too fast for its own good here. All right, that's the simple reality. Now, I've been very clear in recent videos, like exceptionally clear. In fact, I've made two separate videos highlighting the same point. That's how clear I've been. I think that Bitcoin is very much, right, overextended. I think even though I say that, we can go as high as something like 48K before seeing a correction downwards, right? And I've made that possibility exceptionally clear. I think 48K is the highest we can go on this singular move before seeing a correction downwards. I think there is a chance we make it to 48K, but what I am seeing across the board right now is exhaustion signs of a TA. We're seeing things like clear, I mean very, very exceptionally clear since the 24th of October, bearish divergence from a daily chart RSI. We're seeing things like rejection from this red line of a daily chart RSI, which we haven't broken above since before 2017, so that's a 6-year resistance. We're seeing things like volume massively decreasing in this upwards trend. Okay, as you can see, the peaks on the volume are decreasing quite significantly. Yes, the volume itself on a net basis is higher than what it was, but it's about the peaks that matters, right? It means that the spikes in volume, the spikes in buying momentum are not keeping up with what they were before. They're getting less and less as this move increases in trajectory to the upside, meaning that less and less people are willing to buy into this move, willing to buy into the spikes we see in the price action. We haven't quite flipped bearish yet. We're still in a very strong upwards trend. And so it's very difficult for me to sit here and say that I'm bearish for obvious reasons, because we're not bearish. We haven't broken we haven't broken the upwards trend yet, but it is quite clear that this move is running on empty at this point, and it's running pretty much purely on fundamental news. It's running pretty much purely on the ETF news. I'm a very big believer that this move that we're seeing right now, this 80% move we've seen, more so, right, 78% actually move to the upside we've seen, I'm a very big believer that is a result of the pretty much definite ETF approval. I mean, it would be shocking if ETFs weren't approved, right? Everyone's expecting it. And the fact that everyone's expecting it means that this is the ETF approval move. This is what we've seen in the last 3 months. This 78% move to the upside is a direct result of ETFs being very likely to be approved. So I'm not exactly sure that when they are actually approved, that will continue higher. I think there's a pretty substantial chance it's actually a sell the news event, because this move has only really occurred, in my opinion, because of the ETF. Now, to this extent, now it would have happened eventually. I'm a very big believer as well that what happens to the price will always happen regardless of the news to a certain extent. It's just that the news, it exemplifies the move or makes it happen faster, for example. I'm not a believer that news necessarily creates price action, but it certainly gives pathways to make that price action happen much quicker and much more pronounced, let's put it that way. So that's an interesting thing that we're looking at as well. But the ETF, of course, has a deadline at the 10th of January, so it's a little bit far away to be focusing on something like that. I think we will need to see where the market is at closer to the time. Perhaps if we have corrected by then, if we're down here at 42K or 38K or something on January 10th, and then if the ETFs come out, then we'll lead to a pump, right? Because we've already seen a significant correction dragging us back down to a more reasonable valuation. But I think that the 78% move without correction is a little bit concerning. And even with that said, I do admit that we could go higher. We could go to something like 48K. That's the next major macro resistance. But it's certainly not a zone in which I'm personally interested in buying, because I don't believe in buying into greed. And I think this is a prime example of greed in the market. I think that we're looking at on-chain charts as well. And this is, everything I just said there was kind of repeating arguments I made before, but here's some new data for you. We're looking at on-chain chart. We've got an on-chain. It's not an on-chain chart, sorry. It's just a kind of graph or a chart of what Bitcoin has done historically at this time in the cycle. And we can see that the number of days from a cycle all-time high to a new all-time high. Right, so basically, on the left-hand side of this chart, we have the all-time highs we've reached in previous cycles. And on the right-hand side, we have the all-time highs we reach, in the next cycle, right? And there's generally around 1,100 days between the previous all-time high and the break of that all-time high. We expect that to happen again. We expect Bitcoin to be on track with that. We expect Bitcoin to break all-time highs in a position that is similar to which we did in 2013, 2017, 1,100 days roughly from the previous all-time high. That would bring us to around November 2024. For that reason, I'm expecting, or at least expecting is the wrong word because it's not a trend, but I'm very much, it's the most supported idea or most supported conclusion that Bitcoin will reach an all-time high in around November next year. That is the most supported prediction based on what we've seen historically. So with that said, we have to remain on track with that, right? You can see the black line is this cycle, the two previous blue lines are the previous cycles. We're deviating a little bit too far ahead here. It's not much of a deviation with that said. We are deviating a little bit too far ahead. Perhaps we need a correction to bring us down to the baseline, bring us down to something more reasonable for 1 or 200 days, and then we can start going upwards again. We can reach that all-time high by November next year. So it is supported based on what we've done historically that we are deviating a little bit too high. Rest assured, we did deviate too high in 2017, and that deviation was cut down with a nice correction that lasted a long period of time, brought us back to the baseline, and we went upwards nicely. So I think the Bitcoin is actually on track because we have deviated in the past, right? Both up and down below what we're meant to be doing on an average level using these three cycles. But it's certainly a deviation. It certainly is something we need to monitor. And with the fact that we've seen a 78% move without correction, I mean, that's evident, right? So it wouldn't hurt. What I'm saying is it wouldn't hurt Bitcoin if we went downwards for a little while at all. In fact, it'd be very, very, very healthy. We're past the point of, if Bitcoin goes down, it might go to a new low. We're past that point. The bear market is over, okay? We're past the point of bear market lows. We're very much, almost 3x above the bottom. There's no real chance of that anymore unless something absolutely catastrophic happens. We're at the point where we need to be remaining on track with the previous cycles, because if we remain on track with the previous cycles, we can maximize our predictability for the bull market. You have to remember, going upwards to 100K over the next month is not actually a good situation for Bitcoin, because it won't help us predict what's going to happen with altcoins or Ethereum or when Bitcoin's going to top. It's going to throw all of our theory out the window. It's going to throw all of our historical trends out the window. What we actually want to see is Bitcoin pace itself, be reasonable, and top out as per the 4-year cycle theory in October 2025. And if we go to 100K in 2 weeks from now, that's not going to happen, right? So that's the simple reality. So what do we need to do to stay on track? We need to remain on track with what we've done in the previous cycles. Right now, we're deviating a little bit too high. We can go a little bit higher. There's certainly no saying we can't go higher, but we do need to come down eventually, correct back to the baseline so we can see a nice move to a new all-time high at the end of next year. That's what I think personally. I think if we look at the yearly chart as well, this is the yearly chart on the screen right now, 12-month candles here. You can see that each yellow line on the screen here represents the halving and the start of a new cycle. We generally have the halving occurring. We have one strong green candle, which is the bull market. I've just marked all three of them. This one wasn't particularly strong because it was ruined by various events that happened in 2021. We went upwards way too much in 2020. It's kind of ruined. But the fact of the matter is that was the bull market. That's where we saw the vast majority of altcoin gains, for example. So it wasn't necessarily Bitcoin exclusive. We then see the bear market, which I've just marked out. We then see the candle that follows the bear market. Now, what you'll notice is in the previous two cycles, the candle that follows the bear market, the one I've circled on both occasions, is about half the height of the red candle that was the bear market, or at least it doesn't encompass that candle. We're at risk here, right? We've got this yearly candle closing at 22 days. We're at risk of seeing a green candle that encompasses the bear market candle. That's not really what we want to see. Right? We don't really want to see that because we didn't see that in the previous two cycles. It's not exactly ideal if we see it now. So actually, we want to be closing the yearly candle under 46K. And I personally think that that's not, unlikely in the slightest. First of all, we're below 46K right now. But second of all, even if we went to 48K, I believe we'd see a correction stemming from 48K, for example. That's what I'm personally believing. If we went to 48K, we'd most likely see a correction stemming from that region. Perhaps a wick above to scam people, but correction stemming from that reason. Again, that's the highest I think we can go in this move without correction now, for example. So it wouldn't surprise me if we perhaps wicked upwards and then closed below, and then saw a very strong candle next year and a very strong candle the year after, and then a red candle again in 2026 for the bear market. But this is just an example. This yearly chart here is an example of how Bitcoin is just going a little bit too high from where it should be at this point in the cycle. Not really deviating too much. Again, we saw a deviation in 2017, but it's a little bit too high. It's getting a little bit, we need to come back down to the baseline expectation here, correct for a couple 200 days, or even go sideways for a little while to bring us back on track here. And this yearly candle is a reflection of that. Again, the green candle is going quite a bit higher than any green candle we've seen before at this point in the cycle. It is also important to note, though, that in fairness, we've only seen this part of the cycle 2 times, so it's not like it's a very, very strong trend, and it's not like, this can never happen. There's no possible way we can close the green candle above the red candle from last year, and that would completely destroy the cyclical theory. No, that's not the case, actually, because we've only seen it 2 times, but we do want to develop new trends, right? So although this isn't a trend right now, because you need 3 data points for a trend, we only have 1 and 2. If we have this third candle close below the red line, it becomes a trend. It gives us more predictability for the next cycle. And that's what it's all about. We want to keep forming these trends, keep reinforcing the existing trends so that the evidence is stronger and stronger and stronger. And eventually it's just to the point where it's brainless, programming. You can just instantly buy at certain points, instantly sell per certain points, and maximize your predictability. And of course, at some point it will break. Of course, at some point all trends generally do break. But for the most part, the trend is your friend until it ends. And the more data we can get supporting a trend, the better it will be for us. So hopefully that doesn't occur. We'll have to monitor that. Hopefully we don't close above that red candle, above 46K. We'll have to monitor that, as I said. But yeah, that's the fundamental point of this video, just looking at the fact that Bitcoin is going a little bit too high for this point in the cycle. We do have various things that could drag us back down to a more reasonable price. For example, the monthly chart Ichimoku cloud baseline. Okay, so this is the Ichimoku cloud baseline. I've removed everything, as you can see, except for the baseline. And what you can see, if you look at this line on the screen, just look at the interactions we've had with this line in the past, right? Circling a few interactions we've had with the line in the past. You can see that rejecting from this line is brutal. Getting above it is absolutely superb. It holds for support. When it loses for resistance, when it loses for support, we go down massively. It's a very, very important line. It kind of separates the bull markets and the bear markets on Bitcoin. So for example, if you're noticing, every single time we're underneath this line, which I'm circling now, we're in a pretty strong bear market, or at least a kind of correction or accumulation period. And whenever we're above it, we're kind of in parabolic bull market phase. I mean, this has been a trend now that's lasted ever since 2013, 2012 for Bitcoin. So this is not new by any means. And you can see that right now we're testing this Ichimoku cloud baseline. The monthly candle closes in 22 days, as does the yearly candle. And if we're following what we did in 2019, which isn't a completely unreasonable possibility, because we have similarities to 2019, it's the same point in the cycle. If we're following what we did in 2019, we will see a strong wick above this baseline, which we actually could be seeing right now, potentially even a wick to 48K, and then come back and close below it just in time for the monthly candle close, and then we'd start a correction that would last a reasonable number of months until the halving, and then at the halving we'd start to go upwards here. So if we're going to follow 2019, we'd probably go upwards a little bit more, reject from 48K, or maybe even reject here, come back down, close below it, see a correction for a few months. When April occurs, when the halving occurs, we'd start to go upwards again, and that's when we'd see the bull market really kick off, break all-time highs by late 2024, and go upwards from there. And that's completely reasonable. I don't think that's bearish for me to say that. That's simply an observation for what's happened in the past at the previous point in the cycle. So when I say that Bitcoin is perhaps extending a little bit too far above where I would be optimally comfortable with it being, I'm also, applying evidence, an indicator here that suggests that, okay, it's pretty reasonable to assume based on the TA that Bitcoin will be seeing a correction back down to that baseline. And overall, even though right now we are a little bit too high, the evidence does suggest that we would come back down, or at least go sideways, or see some sort of, event that would drag us back to the reasonable kind of baseline of where we're meant to be. So I'm not actually concerned about Bitcoin at all right now. I think the justification behind this move to the upside is very evident. I think it's ETF based. I don't think, as I said, that deviating too far away from the baseline of where we're meant to be is a bad thing at all. We did it in 2019. We actually probably did it in 2013 as well, but in that occurrence, it was too low rather than too high. So we're in a very healthy position, I think, for Bitcoin. But yeah, I stand by what I said. I think the evidence at this point is leaning towards Bitcoin seeing weakness at this region. I think that we could go even higher to 48K just based around pure greed and hype. But I think from that point, that would be the absolute top and we'd see a correction stemming from that region. I think if you actually ask any analyst a serious question about where they think Bitcoin is going, they'll probably agree with you on that based on TA. So that's my Bitcoin analysis today. Going a little bit too high, but certainly have reason to believe that we'll come back to that baseline. If not, going a little bit higher first and then coming down, or just coming down straight from here. Yes, the ETF news will toss it up a little bit, no doubt. The ETF news is a big deal. And if we see, a dramatic pump based on the ETF news, which I think at this point is actually a little bit unlikely, given the fact that we've already seen a massive pump. But if we do see that pump, I'll stand by what I said today, because I think that there's only so much you can predict, and you have to use the evidence you have available. I think when it comes to ETF news, you're purely using speculation. You may as well go to a casino and play blackjack. So I think you have to back the position that has the most evidence, and I think this position I'm taking here has the most evidence. Bitcoin is overextended. It has to come back down, whether it go to 48 first and then come down, or whether it comes down from here. It probably has to come down. We probably have to correct before the halving, and then from the halving, we can start to build up and go upwards again from there to break all-time highs next year. I think that's a very reasonable position. Guys, tomorrow I'll be discussing the weekly candle close, because the weekly candle is very important this time. This week, I should say. We've seen 7 green weekly candles in a row. This will be our 8th green weekly candle in a row. Just that alone is massive. Then we've also got some bearish things going on the weekly chart, potentially bearish if we don't break out above it. And we've also got the first ever weekly chart golden cross between the 50 and 200 week SMA. That could be huge for Bitcoin as well. So big stuff to discuss tomorrow. Stick around for that video. In the meantime, I want to thank you for watching the video. I want to encourage you to stick around for the advertisements here at the end. We've got the VIP group on Telegram. We've got the Crypto Academy, and we've got some exchanges for you. So Telegram VIP, we trade altcoins on Telegram. We have the pricing details for the VIP group here and what you actually get for the VIP group, all discussed in this free to join information group. It's like a group before the group, right? You can join it for free. It has a PDF of all trading results. It has a 14-day free trial membership. It has the pricing details. Join up there, check out the trading results, fully transparent, every single win, every single loss, 80.5% win rate so far. It's been exceptional. Make some money on VIP, get in the VIP group now. And then also check out Bingx and Bitget exchanges. If you want a new exchange, if you're looking for an exchange that is cheaper than your current exchange, perhaps if it's safer than your current exchange, you can check out these two and consider them. Neither of them have been hacked before. Both of them very low in trading fees. Bingx is a global exchange, and Bitget is global except for the United States. So choose one based on your geographical location or your preferences for an exchange. Yeah, both are great. I've got my referral links down below. 15% trading fee discount for both the exchanges there. Save some money with my referral link. Get on there, help yourself out, and help the channel. And then also check out the Crypto Academy, Become a Trader 10-unit course if you want to learn how to trade. All of the information for the course is on the website, including the structure, the details, the contact information. It's all there. Check it out if you want to learn how to trade, guys. Thanks for watching. Hope you enjoyed, and I'll catch you tomorrow. Cheers.